Hello, everybody. Hope all of y'all are doing well today. In this video, I'm going to be going over the Twitter stock. I'm going to be providing my full fundamental analysis and technical analysis. As of today, the stock actually kind of blew up. It released its Q2 quarterly reports, and I can't wait to show you all that's been happening with this company and how other social media companies such as Facebook, Alphabet, Pinterest, all of which have been going up today. So yeah, can't wait to show you guys all about that. But before I do, please consider subscribing. If you like more fundamental and technical analysis on the most trending stocks, please consider subscribing to this channel. This is your channel. However, I am not a financial advisor, and that this video is for entertainment purposes only. That said, let's get on with it. All right. So to start, I'm going to show you the fundamental analysis from their Q2 released report. And the first thing that caught my eye in their condensed consolidated statements of operations was their revenue. Their revenue from the 3 months ended of 2020 was $683 million. But that number as of 2021, which can be seen to the left, doubled to $1.2 billion. And the cost for the expenses for the revenue to increase and stuff, they didn't increase all that much. And overall, the total costs and expenses were significantly not as high as I would have expected it to, partly because, well, their revenue doubled, but their total costs and expenses only went up by $200,000. Sorry, $200 million, which isn't bad considering the growth that Twitter has had. On top of all of that, if you look here from their income loss from operations from the 3 months ended in 2020, it was $273 million. And now that number heavily decreased by nine times as much to $30 million. Going a year back in that perspective, then you wouldn't be sure whether or not to buy with the fundamental analysis for this company. But seeing that the income loss from operations heavily decreased is a very significant factor and a potential growth factor for this company. That said, with all of that said, from the condensed consolidated statements of operations, Twitter is looking pretty good. Now let's move on to their cash flows. All right, so on their cash flows page, to say in a summary, one word, it's very sweet, just like the consolidated statements on the previous page that we discussed about. Looking here from the 3 months ended June 30th, 2020, well, it was 200 million, now it's 381 million. Looking back for the 6 months ended 447 million, about half a billion to 772 million. Overall, the net cash, the cash flows in summary, it's increasing, it's doing phenomenal. But what caught my eye here was the stock-based compensation expense. This number right here with the 178 million, the 132 million, 289 million, 230 million could all be added back into their net income. Now, with that said, this is pretty sweet, but again, the stock-based compensation expense that could be added back to their net income, and with this, it's kind of weakening the cash flow statement. Now, the reason why I believe that the stock-based compensation expense should be added back is because anyway, the company has to pay back its employees. None of them are going to really work for free at no cost. So this number being there, seeing this from an investor standpoint, you got to know that this has to be added back into the net income. But going down, looking further on to this page, the repurchases of common stocks also stood out. So right over here, the repurchases of common stock, they bought 330 million new shares of the stock, 495 million in the end of the last 6 months, which Twitter is basically saying that their stock, their share price is currently undervalued and they're willing to buy more. So that concludes my cash flows. I know I didn't really go show you all the balance sheet, but the balance sheet looks pretty solid. The assets have increased from 15 billion to 13 billion to 15 billion. Phenomenal. And the liabilities, they did increase as well. But overall, It makes a ton of sense. I mean, as the assets increase, they probably had more uh, expenses to take care of and liabilities and other debt had to accumulate. And it looks more logical and reasonable. So the company is looking solidly fine in the fundamental analysis. Now, with all of the fundamental analysis done, I want to show you some of the news popping up for this company and how it might even affect other social media companies like Facebook, Pinterest, Snap. So let's go. All right, so according to CNBC, in this article over here, it says Twitter posts fastest revenue growth since 2014 in pandemic rebound. The shares rose up by 9%. The earnings were 20 cents per share adjusted versus the 7 cents expected. The revenues right now 1.2 billion versus the 1.07 billion, and the monetized daily active users 206 million versus the 206.2 million. Overall, Twitter has been meeting its goals or exceeding it. And as a result, with all this, Twitter's revenue grew 74% year over year in the quarter. And in the bottom of this article, it says for all of 2021, Twitter said that it expects headcount and total expenses to go up at least 30% and that revenue will grow faster than expenses. Notwithstanding the after hours move, Twitter shares are up about 29% since the start of 2021, while the S&P 500 index has risen 16% over the same period. Overall, this is huge news for Twitter and any investor looking into Twitter and what Twitter might bring into the stock market. Additionally, on top of that, it's also important to consider that companies like Facebook and Google Alphabet might increase as well. Who knows? Maybe Alphabet or Facebook or even Snap, for that matter, like the giants, they might also be expecting a fast revenue growth, just like Twitter. And being able to predict this, knowing that Facebook, their share price is far lower, and knowing Alphabet's share price is far lower than Twitter and Snap, more research would have to be done. But if you would like me to make a video on that based on the analysis you've seen me do so far, please like and subscribe and comment down below, and I'll definitely be willing to do it. All right, now that concludes my news. All right, so now just by looking at the technical analysis for Twitter, it can be seen that the company has been on it has a bullish pattern, and that it's growing over the long term, and that it's constant and you can see it, and there's no significant dip. Even according to Yahoo Finance and their technical events, it seems that it's bullish all around from short term, mid term, and long term. Right now, the share price, the RSI, is saying that this isn't completely overbought stock. A lot of buyers are buying, probably just because of the huge explosion that happened recently. And the MACD also states that it's crossing up again after a huge dip. So that might be something to look for. If I zoom in here, we can probably show the more significant technical analysis. So let's get in. Seeing the 1-day trend, the share price has been going up and down uh, above and below this SMA 180 line. Every time it goes below this SMA 180 line, every time the share price touches that line, it serves as resistance, as can be seen here. So when the share price tried going up, tried to go past it, it didn't. It came back down. And when it did go above it and when it bounced up on the SMA 180 line, when it bounced back, it started going up and up. But when it dipped again, it fell back down and again met an approximate resistance right over here. So right now, the resistance level is currently looking around the $70 mark. And right now, after hours, it's 73.50. So right now, it could be determined that we could probably expect Twitter to drop as soon as the market opens tomorrow. Sellers are probably going to want to bring the share price down because it hasn't gone this high before. On top of that, it's very close to its peak, but in the stock market, anything could happen and nothing is guaranteed. Now, checking this out, the after hours, the MACD still says it's going upward, and it's still roughly overbought at 63. Not roughly, it is overbought, and the share price just fundamentally might decrease. A dip might occur, but if it doesn't, this SMA 180 line, as I mentioned earlier, serves as a support level now because the share price is currently above it. If the share price continues to go up, if another candlestick like this goes upward, it might be a sign to buy. If the MACD shows a positive value, on top of that, if that is not the indicator, it will be whenever the share price bounces back up on this SMA 180 line, like how it did in the past prior, like right over here, whenever the share price, when it bounced down and bounced back up, that's the indicator to buy. But in all honesty, Twitter might be an overvalued stock considering that it got so high so fast. Other viable options may be considering Alphabet or Snap or Facebook. After all, they're social media companies too, and if one is currently dominating in the industry, it's likely that others are too. With all of this said, this concludes my video. I hope you guys enjoyed it, got some valuable information out of it. Um, I thank you so much for watching once more. If you like the content I'm giving out to you, please consider subscribing for the most information on fundamental analysis and technical analysis on the most trending stocks out there. Please subscribe. You're not going to want to miss out. You want to know what's going to happen. Thank you all so much. Have a great day. See y'all later next time.